Good morning, traders. Are you guys ready to start the week? I know it's a short week, but something tells me it will be action packed. Let's take a look at what happens. We'll take a look. The analysts are coming out of the slumber and ratings all around. We'll talk a little bit about new car and used cars troubles could be coming. We'll take a look at the chip design. ARM coming soon, IPO, setting an IPO range of 47 to 51. Interesting. Will this be the IPO that really gets things going? And of course, we'll take a look at the rebalance. Airbnb, Blackstone joining the S&P 500. Stay tuned. We got a great one for you guys. Like always, right here on Pre-Market Prep. Don't go anywhere. It's time to rise and shine, traders. Let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, traders, let's get it started. Let's take a look here at the S&P 500, and I'll just do the SPY. You guys can see we were down a little bit at 5 a.m., started to climb back. We're almost back there to pretty much unchanged. We'll see if we can get back to Friday's close. Definitely getting a little bit of a leak down in some of the tech names. You guys can see how the Qs were down a little bit more and starting to get back, but they're a little bit further than, of course, Friday's close. We'll take a look at that action. And, of course, we'll take a look at some oil stocks. I like to keep an eye on WTI. I see WTI has been in the range between 85 and 86 just last week. We were down there towards like 79, 80. So big move up there towards 85 and 86. We'll talk about how that could be impacting some oil stocks. Gold down today, silver down also after the recent lift last week. So we'll see if these start to get hit a little bit more. And then, of course, we can keep our eyes on Bitcoin to see what goes on in Bitcoin. Will we continue to see a lift on those names? Let's just get back to the SPY. Let's get back to the market. Let's bring on my man, Dennis Dick. Let's talk about what he's been seeing. And let's take an overall assessment of the macro situation.
I mean, we're still in this choppy environment. August was kind of choppy, straight down for the first 3 weeks and straight up for the last week. Got back a lot of the losses here. Some people think new all-time highs are on the horizon. I think the next few days are going to tell the story here, because the one thing that you have is traders back at their desks today. Labor Day, back to school, analyst action, crazy here today, Money Mitch. So many upgrades and downgrades where we've had crickets here for the last few weeks. All these analysts are now back at their desks. They're getting their notes out there. The ones that they didn't get out today, they're going to get out there tomorrow. So expect another big analyst day there tomorrow. Moving stocks around. You've got commentary from some of the big dogs on the macro picture, UBS, Stifel. So I don't know where you want to start, but there's a lot of commentary on these markets. Everybody has an opinion.
That's what it's all about, and we'll get into that opinion. Let's start it off with some of these ratings. Normally, we come to them a little later in the show, but I think there's some of these that are going to be moving some stocks. And
yeah, there is.
Like Dennis said, we had like a little bit of a quiet period. A lot of it, you guys could see the lower volume in the market. Let's see if the volume comes back as the analysts step up to the plate. First one we're going to talk about today is Oracle. Yeah. This is Barclays upgrading Oracle to overweight, raising price target to 150. And as you guys can see on the right-hand side, this seems like it's been breaking out on a nice little kind of pattern here, now starting to rise. Can it get back there towards the highs? I have on the 15th of June, we had 127.54. We're at 123. Are we on our way? What are you thinking here, Dennis?
I actually do think we're on our way. I like this upgrade. I actually was looking at this stock just from a technical basis, and it looked like it was trying to consolidate, trying to break out here. It is kind of value tech as opposed to, the nosebleed multiple. Forward PE on Oracle's only 21. I know, yeah, if you look on like a current PE basis, they see 39, but you want to look at the forward ones where the estimates are coming and where they're going to. 21 is where it's really sitting at, which isn't so really expensive. A little expensive relative to where Oracle normally sits, but we know they're taking this as an AI play here now, and it's a value AI play. And you got 3 days of consolidation with 3 lows, almost identical: 120.09, 120.15, 120.12, all in the same area, finding nice support there. Now you get the analyst rating that breaks it out of here. Obviously, overall market is going to move this stock as well, but I think the stock could see new all-time highs.
Yeah, it's definitely something to look for. And I mean, these are the type of stocks that I think will truly get the AI lift, right? And that's one thing that I think we're going into more and more is determining which one of these stocks are true AI and actually going to be revenue drivers to the bottom line right now, right? And I think that that's the important thing. Companies like Oracle, companies like CRM. You guys heard a lot of mentions last week on their AI. Look at the recent kind of
112
uplift
times, I
there.
think, was the Nick Brown count.
Yeah, and I think that these are the type of stocks, definitely, that it's not a talk about if AI is going to hit the revenue.
They will.
Yes, they will actually hit the revenue, and I think that that's the important thing, distinguishing between what's true AI and what's more like hype AI. This, to me, definitely CRM, Oracle in that space. I definitely keep an eye out, and then we'll see if Oracle can get to the next level, next daily level. Kind of this high right here from the 13th is 123.99. I think definitely Joel would like me to point that one out. There's a couple of daily highs at the 123.36. So let's see if we can get back into there, 124 handle, and start to climb on Oracle. Let's go to the next one, Lulu. All right, Bernstein upgrading Lulu Athletica to market perform, raising price target to 366. It's up there to 400. This is one that just recently took a downturn here. I was even calling a short here, and it went down pretty quickly, but then also came back just as fast here. Dennis, what do we do with Lulu?
Well, turned on the earnings report. Stock has been unbelievably resilient forever. This has always been a best of breed stock. It's always traded with a premium multiple. The earnings report knocked it down $10, $12 on the initial report. Actually, I think it was down almost 20, Joel said. Got down to that double bottom at 360. It was down there for about a millisecond and then turned around and they started buying it, and they bought it all day on Friday. This report or analyst report isn't going to affect it because this is one that's simply chasing the price. They've been wrong. They had an underweight on it. They're bringing it up to neutral. Stock. So if you're wondering why it's not up on the upgrade, there's always, you've got to, understand how ratings work. When you get the ones that are following a big earnings report, they don't have much influence, especially when they're just going up to neutral, because it's just the analysts throwing in the towel on the sell rating is what it is. So this isn't like conviction buy. This is just, they still have 360 price target. They've just been wrong, and they're moving up so they don't look that bad. So they're moving their rating up. So this isn't like the Oracle one that we just covered. Completely different. Not going to move the stock.
Donka Dave asking, is it more prudent to pick a basket of stocks in AI, say the top 3 or top 5? Yeah, I mean, I definitely agree. So, I mean, you're not just going to pick just one winner, right? But the key there is just trying to distinguish which ones will actually have revenues from AI. Now, Lulu, I think
this is why, and it's a good question. Like, this is why, and Donk and Dave, this is the issue, is that the only company we know for sure that is 100% going to benefit from NVIDIA or undoubtedly from AI is NVIDIA. And that's why everybody keeps
100%.
going that. It's the only one that is benefiting now. Microsoft talked about, we all thought it was going to be huge, ChatGPT. Then they talked on the earnings call a gradual, and that's when they knocked it down. Gradual, or earnings increase or gradual revenue increase from AI. NVIDIA is robust. It is coming like it is there now. There's pull forward, I've been arguing, because everybody's trying to catch up and they're using the NVIDIA chips to do it. So, I mean, NVIDIA, we know, is a huge AI play and it's a huge driver. We don't know any others. I've speculated for a long time. I think AMD is going to be a player, but we don't know that for sure. We know there's going to be portions, but we don't know how much. Like, we know a lot of these companies like Microsoft, Broadcom, NVIDIA, or Broadcom, Oracle, AMD are going to benefit from it, but we don't know how much. We know NVIDIA is benefiting from it big time now. So you want the AI money now? It's NVIDIA. That's why this stock continues to get bought on dips. Had a dip on Friday. Does the dip get bought back? I think so. If I was looking for Nvidia, 450 up to 500. Think about 475 here today. So maybe you get a dip down. We got a little bit of weakness here early in the market, but I think the buyers reemerge here in Nvidia once again. The only concern is that we didn't make a new high on the recent move, so you got to keep that in mind. 502, 500, and the valuation is still very rich here. So I'm not in Nvidia, but it has worked to buy dips on this stock.
If I add one more, because we're thinking about like basket talk, right? I'd include Adobe in there because I really do think Adobe's that type that will find ways to use regenerative AI and find ways to make revenue to, of course, their Adobe suite and all their kind of editing software, all that kind of software. I mean, let's be honest, this is one that's been getting the lift. And I think it's already gotten a huge appreciation for it. It's up in 3.4 months, 52%. What a move there in Adobe.
These are all potential future revenue generators, Adobe, all of these companies here. But like I said, the only one that's getting it all right now, hardcore, is
right
NVIDIA.
now. Yep.
So, I mean, Adobe, I agree. I think Adobe's going to be an AI player. I think Broadcom's going to be an AI player. I think Oracle's going to be AI. I think it's going to be a lot of technology companies that benefit from AI. But again, the one that's benefiting the most right now is NVIDIA, and that's why the relentless bid there.
All right, let's go to another upgrade here. Let's go to Lowell, as we've been seeing, of course, home improvement, housing doing well. They're stepping up here. This is an upgrade to outperform. And
Who's
this is
upgrading it?
Bernstein upgrading Lowell's to company to outperform and raising price target to 282. I think that price target is definitely interesting because now we're talking what? We're talking above the 270 highs here. We're talking way up here in this space. What do you guys think about this call on Lowe's?
Home Depot and Lowe's have been coming back. They obviously, were May, June, July, and then August we had a little bit of weakness, but they're coming back to housing plays. You'd think interest rates, but again, these aren't direct because these are fixer uppers too. So some people just fixing up their homes, going in and doing stuff there. You're getting close to the highs. Lowe's the high of the year, 237. You're $3 off that, so that's your next resistance point. Resistance very well defined. The all-time high is actually set back way back in 2021. All-time high on Lowe's was 263. So you're still a little ways from there. Let's contend with the 2023 high first. It's going to do that today at 237. Let's see if it can get through there. But that's your next major resistance point.
All right, now this one's an interesting one. DPZ, Domino's Pizza. Who's ordering their Domino's? TD Cohen is for sure. TD Cohen upgrading Domino's to outperform and raising the price target to $450.
It's one that you always seem to make money if you buy the dip, and the dip has been substantial in this thing. If we go back, to the all-time high in Domino's Pizza, it is way up at $567 back again, 2021, when everything topped out. We've been slowly crawling our way back. It's been a pretty good June, July, August. We are holding the gains, which is good news here as well. We have not filled that earnings gap. I believe that's what that was back in July, if my memory serves me well. So now you look, 400 is big psychological resistance here. Can we get an upgrade to kick us through that? I think eventually it could go. One thing, when Domino's decides to go, it really goes. So this is one that you got to be very careful and say, oh, $3-4. I've seen before Domino's Pizza go $20 on an upgrade. So you have to be very careful with this one. PE's always been somewhat reasonable on this stock. We go, it's 25. So, it's not super expensive, but not super cheap either. I'd say it's more on the expensive side, probably from a restaurant standpoint here, but we know people order Domino's. It's pretty stable. It's got the consumer staple almost like multiple there where they pay 25, 26 times for these things because the earnings are pretty, predictable there. So Domino's Pizza technically looks okay. Get above 400 would look a lot better, but I've tried, like I said, fading upgrades on this stock before and been run over. So just because it's up $5, don't think it's fully priced in. Sometimes Domino's can really go on upgrades.
Yeah, I was trying to find why that got that pop there in on the looks like the 12th. All right, yeah, that's his earnings. Yeah, I was just making sure. All right, so it's on the morning of the 12th. They were.
There was a rating in there too that really ran it too, and I don't know if there was the June one or the July one. There was two gaps you see up on the chart. One of them was a rating. I think back in June it was a rating. You can see how violent sometimes these things can move off a rating, which is crazy. So I think, you're looking at stock like 305, caught an upgrade, and the thing went to like 325 the next day. It's like a 7-8% move. So I mean, sometimes there can be really, really big moves off these ratings. So you got to be careful on Domino's Pizza.
Big outlook. I'll be looking to see if they can get above 406.11 and 406.31, get towards the 406.50 area. And then now you're going for this high, this 409.95, 410. I think it could be in reach. I like how it's holding that 380. Definitely, if it gets back into that gap zone now, that you'd be a little bit careful. And I like the reaction that you're seeing coming down and then coming back up for that 400. 400 is going to be something to watch for today. All right, RBC capital upgrade on American Express, AXP. All right, this is an interesting area because, of course, we've been looking at the credit services. And what do you think here, Dennis? Do you think this could get the pop?
It's getting a pop. This isn't the kind of stock that I think is going to just blast off. Like a Domino's Pizza, when it's sitting up near those highs, has a history of sometimes blasting off on a rating. American Express does not. You got major resistance up at 164 to 165. That's $3-4 higher than there. So there is some room. It is sitting down near the lows. If people are looking to come in here and bottom fish, the stock is sold off substantially, hasn't participated in the rally. I just think you got overhead supply everywhere here, so it's hard to get that excited about it. The Domino's Pizza, you got a little bit overhead supply just comparing it there, but it's not like this American Express where the stock's been down for a month and a half here. So I think overhead supply will stall this out. I think there's some room to 164 to 165, but it's hard to get too excited about this upgrade.
Let's get straight to shares of Airbnb, and as they're climbing, and also Blackstone is climbing roughly as 5%. Even on the pre-market, we saw Blackstone up. This is off the news, of course, that they'll be joining the S&P 500 prior to the open of trading on Monday, September 18th. I'll give you guys the list of these stocks that are moving into the S&P 500. Here's the list here, and we can run down and take a look how this should affect some of these stocks. And some of them are being deleted. Some are being added, of course. So you guys see here, the additions are Airbnb and Blackstone. Of course, Airbnb has been something we've been keeping an eye out for traveling. And then Blackstone, could they be getting that lift also with kind of the Bitcoin news? I've been keeping an eye on Blackstone. It's been looking not bad at all. Now, the ones that are being deleted here, LinkedIn National and Newell Brands. We can also take a look at those. Let's go. Let's start off with the additions here. Which one do you want to start off with, Blackstone or Airbnb?
Let's start with Airbnb. This is an incredible move here for it. And the S&P 500 ads really move lately. They've really been going. Usually, these moves are fades. Usually, this is done just for indexing. Everybody's chasing, not with company fundamentals from a history. And not saying you just come in here and sell it right away at 140, but it seems to be like these moves often do give them back. Not on day one, again, because of indexers coming in. But keep an eye. They're going to have a gap in the chart here now. I think eventually that gap could fill. Obviously, depends on what the market does overall. I've liked Airbnb for a long time. I did sell all of my Airbnb. I am out of it. I bought it at 110 after the earnings. I sold some at 149. I sold the rest of it in the 130s here. I think 135, I want to say, or somewhere in the 130s. So I'm out of it entirely. On a pullback here, I would have been more interested. It started to look interesting a little bit lower. I was hoping it keep coming down, but it didn't. Now you get the SP taking it the other way. I'm not chasing it. I've never made a lot of money chasing S&P ads. You think about like the history and how some of these stocks, actually top out on S&P ads. It was Penn Gaming. Remember that one? Got added into, I think it was the S&P. I don't know if it was the 500.
Yeah, I remember.
But it was one. Yeah. And it went up that day from like 115
run
to like 130. That was the absolute high. It basically topped out right then on the S&P ad. So a lot of times these are fades, longer term fades. Again, I don't fade them on day one because the indexers are coming in. They're coming back to their desk. They're probably going to buy it here today because they need to chase it. But if you're an investor, I'd look for a better entry point.
Yeah, I would agree with that, especially as an investor. I think that one thing to definitely look for is, can Airbnb get through 150? It struggles there multiple times, so we'll see what happens there. Blackstone Blackstone coming up to 108.50. I've actually really liked this chart, especially as of late. You can see the reaction off the 100. It broke up here towards the 110, 108. Just got through this high here. Now I'd be looking for pullbacks kind of coming back here towards like 106, 105 area. But this doesn't look bad. And overall, I mean, asset management, not looking too bad here. I like the weeklies also, especially when I'm looking at kind of more of a stock like this. It doesn't move too much. I want to be moving into deeper time frames to kind of make sure that I'm not catching myself in just overextended on the daily, right? Jumping towards the buying action. No, I want to be looking for pullbacks and then trying to jump in on those pullbacks to Blackstone. I like if we can come anywhere near the 105s. You can see it was kind of like support over here. I'd look for that to kind of act as support here. Battle a little bit between 105 and 110, eventually taking that 110.
I think the 110's resistance, again, I'm not chasing anything on an S&P ad because just from a quantitative perspective, it doesn't pay to chase these things. And there's a lot of them, like you said, you were showing some, but there's a lot going into some of the smaller S&P indexes here as well. They were really doing a lot of rebalancing on Friday night. I think there was over 50 stocks that were affected there. So obviously, we're looking at the S&P 500 because that's what we talk all the time. But there was some smaller moves in some of the smaller indexes as well. Again, not chasing these moves, just using it as a teaching tool here. It usually doesn't pay to chase the S&P ads.
Definitely. And we'll see. It doesn't chase Blackstone 110. You called that even better than I did, Dennis. I think you saw these resistance. Let's go to the next here. Next topic here. Let's go to ARM. ARM, what do you think about this IPO, Dennis? This is an IPO that's going to be released. ARM chip design submitted on Tuesday an updated filing for its upcoming blockbuster IPO here. The range is between $47 and $51. The big thing is this is going to compete with, now you're competing with AMD, you're competing with NVIDIA. Will this competition come in and kind of get the lift because it just already is getting the appreciation?
What day do we think this is? What day do we think this is going to start trading? Do we have the actual date?
I'm going to look for the actual date right now. I know it's coming up real soon.
$51 a share they're looking for. I was just trying to look in the background here too.
Okay.
I think this is going to be one that's really going to get traded. So there's going to be some heavy volume. It's going to stick around on this. I'm looking forward to having this one to be able to trade it. I never trade the IPOs on day 1 or day 2. Sometimes, after a week, then I got some information, but they're just too wild for me off the hop. Again, I'm more a risk-adverse trader. I've stayed in this business for 23 years by avoiding the high flyers because I don't want to have a huge loss when you're on the wrong side of it. It's hard to control risk. But this one's going to be a fun one to trade for a very long time. So I do think, it's going to be a good opportunity. $51 a share is where they're looking at. $52 billion valuation. This company's going to be a monster.
September 13th is the date of the release.
September 13th. So it's coming. It's coming. September 13th.
It's definitely on a lot of people's radars. That's for sure. I know it's going to be on my radar. Just a pure appreciation for NVIDIA will be something to look at.
So there's another stock to, I talk about the piston trading. You're going to move all these stocks are going to move there together. So yeah, that one into your relationship pile. And, and obviously, it's, you can trade it, not you can pair it with NVIDIA or anything, but you got to, that's where it's going to move is in those sectors.
Man U. Let's take a look at Man U. Looks like the deal is not going to go through here as the UK Daily Mail reporting Saturday that the Glazer family will take the club off the market after failing to get the asking price. And this stock has seen huge appreciation thinking that the deal was going to go through. I know you're a big ARB. What do we do here, Dennis?
And again, when rumors started for this deal, this stock was down at $13. So I think the market, we didn't knock it down to 13 because the deal, is not dead, and where there's smoke, there still might be fire. And I think Man U could still get bought. So I don't think the risk arbs are going to knock this thing down into the, 15, 16, 17 area. 20 is good support from a technical basis here. But again, when you're trading stuff on rumors, when you're trading stuff on potential M&A and stocks are in play, technicals go away. So, I mean, it all depends on, what's the next headline coming out. Is the deal really dead? Is there anybody else potentially there? Are they really taking themselves off the market? Or is this just trying to get, a better price here because they don't obviously like the price that they're getting? Just consider, that we did come from the $14 area before all these rumors started way back. And I think it was like November of last year, might have been October. Yeah, October of last year. So that's, the bottom line is that this real deal really is dead and they really do not get any buyers. You could see that leak into the teens. So I don't want to be too early on this here. I don't think it's down enough for me as a risk arb trader to take a shot. I would say I'd want to see this lower, but the risk arbs are saying deal is not officially dead.
Let's go to the cars, autos. Let's talk a little bit about what's been going on here. Of course, I've been talking about this for a while now. Could there be new car or used cars troubles coming? Of course, the current UAW contract expires on September 14th. So we're getting closer and closer. And as we get closer, of course, we could see a strike happen, right?
Mm-hmm.
I've been talking about that. And that's been my concern when Ford was up here at 15, let alone now here at 12. I mean, it has come down. The current UAW president, Sean Finn, said that I know that our demands are ambitious, but I told the companies repeatedly, I'm not the reason that members' expectations are so high. What's driving members' expectations are the big three's profits. You cannot make 21 billion in profits in half a year and expect members to take a mediocre contract. And so this just tells me that they're going to keep battling here, guys. They want their money. I saw an interview with the ex Ford CEO that was on CNBC, and he stated a couple of things that I thought were really interesting. I think one of the things he stated was the real battle here is not necessarily on the margins that you see today. It's the margins that you are seeing coming with EVs. Because if EVs are going to be the focus moving forward, the margins there are so tight. Like he said, the only person making money on EVs right now is Tesla, not the big three. And so this is the battle of the contract, because if we give up a lot of money for these, these labor deals, then those margins get tighter and tighter and tighter. And so Ford CEO,
and their EVs aren't selling well. The Ford F-150 Lightning has been an epic disaster. I was very excited when I was long Ford 2 years ago. I was very excited for that truck to come out. But we know it's been a disaster. We talked about the towing capacity not being up to par. I talked to a Ford auto worker there that works on the line, and he said, don't buy it. I won't say who it is, obviously, but he's like, there's too many issues with it right now. He's like, I would wait. I would wait until you get a couple years further into this where they can fix some of the issues. So, I mean, this is just, been a disaster. The EV, and then you've got, obviously the unions want more money. They can see everything's got more expensive. So everybody wants more money. This is, the types of businesses where their margins are getting squeezed. And here, it's almost like it feels a little bit like Disney, GM and Ford. And you're like, how can it be like Disney? Because Disney was firing on all cylinders. Those parks were firing on all cylinders for the better part of a year and a half after COVID. And the stock still did not want to go up. And why the stock didn't go up is because, one, the market maybe just realized that the other businesses weren't doing very well, and it knows that. But two is maybe they realized that the parks were not going to always be running, as hot as they are. So if they ever started to slow down, it was going to affect the price. GM and Ford have the same problem. They've been selling at record profits. They've been selling so many cars, and the stocks still aren't responding. They have these low PEs, and maybe they realize that these margins on these EVs are going to be a lot tighter. They're not going to compete with Tesla on the margins. Tesla doesn't do any advertising. They've spent a huge amount of money on advertising. Labor costs are going to be cheaper at Tesla. There's more automation. They just make them more efficiently. So, I mean, GM and Ford are going to come out. Their EVs aren't selling that well. They don't have the name like Tesla does in the industry here. They got problems. And now you're going to go on strike and have, maybe have to get, obviously squeeze these margins even more. It doesn't sound like a recipe. Like you look at Ford and GM and you think, wow, they're so cheap. The P's are so cheap. How can you go wrong? I think you can go wrong because you know what? If they start squeezing the margins, that doesn't help. And then if the revenues, if they've been firing on all cylinders and now all of a sudden, the economy starts to slow down even just a tad, that's the first thing people cut out is new cars. So I'm staying away from GM and Ford.
And there's more problems too. Ford ex-CEO stating that you have to make over $100,000 per year to afford a new car right now. Of course, it's not an exact, but what he's pulling it out is that the average
Yeah,
new car deal right now, Dennis, you ready for this? Over $700.
yeah, yeah. The
That's
financing.
not the way it was.
Yeah,
That's not the way it was even in
no.
2020. I can tell
Here's
you right now, I'm not trying to afford no $700 car bill.
yeah, yeah.
Uh, who is?
Mitch, this is so this is why solar, and we've talked about this. Solar has really been in the gunner. Like, why can't solar catch a lift? Why can't solar catch a lift? Because you know what? Even though interest rates may go down in the future, they're here to stay in the short term. And these are financing plays. And these heavy financing plays, this is tough for people to get the credit to go out and to buy solar panels for whatever they're doing for the house, or or getting involved. It's the same thing with automotive. These are huge financing plays, and interest rates are hitting this industry. So, and if they're not hitting them today, they're going to hit them tomorrow. So this is the issue with Ford and GM. Financing plays, it's just more expensive now. Yes, there is some people who are still buying new cars. There is a lot of people who make more than 100,000 a year, but the average Joe is maybe not looking at a new car here now, Mitch. So it's a fantastic point.
Mhm.
Financing is an issue here as well. There are a lot
Yeah.
of issues here for Ford and GM. I think we need to allow them to figure it out before just jumping in because the PE is cheap.
Yeah, and some people were saying, could that give Carvana a lift or companies like CarMax a lift? All right, what do you think about that outlook?
It's saying obviously that
Like
people got to come in
used
and fix up
cars,
their used
yeah,
car
that
dealers
used
as
cars
opposed to
because
new.
they can't
And,
pay the new
and there is
car
an
bill.
argument there. Carvana is its own story. We know that's just trading, on the squeeze and doing its own thing. CarMax, I've always kind of liked that stock. It's one that always seems to come back. I would rather own a CarMax here than a Ford or GM, but I think I'm just staying away right now. I think if margins start to get squeezed, we know people are willing to pay to do stuff. The cruise line's still busy, the airlines are still busy, but I think that'll be a sacrifice of going and buying even a new car to you, which is a used car. So I mean, new cars I think are the first thing that's getting cut. Used cars, maybe I can drive my current car for a little bit longer. I'll just fix it up, I'll get something, take it in, spend some money on it, fix it up. I mean, these are just big ticket purchases here, and again, interest rates take a long time to work as well, folks. It's not like interest rates, you raise rates and everybody stops spending tomorrow. People stop spending when they don't have money, and it's not instantaneous, these things. So as much as we've seen certain pockets slow down, it hasn't really hit the economy yet. But I still think if you keep interest rates elevated where they are, certain big ticket stuff like cars, new cars, I don't want to go there.
All right, let's go. We'll finish up this conversation. Let's get back to the markets. A lot of talk on soft landing, right? And you're seeing analysts talk out there, UBS saying that they're sticking with their softish landing view for the U.S. economy. We got a couple of outlook there. They gave also a bear case view that by November's FOMC meeting, the economy will have shown clear signs of slowing and leading the Fed to finally putting an end to its sharpest rate hike cycle since 1980s. What do you think about this outlook? I know that you caught some other analysts' outlook. Dennis, what do you think about what's going on with just the overall economy?
Again, it's analyst day. We're going to get Sean Emory here in a minute too. But again, it's analyst day, and they are coming out not only with comments on individual companies, but they're coming out with comments on the overall macro environment here. And it's UBS that's giving these comments, Mitch, just to clarify.
Yes.
So UBS bullish here, Stifel conservative. So Stifel was saying the opposite here today. They said it's extremely, I was trying to find actually the quote if I can find it, because they used a word extremely. Stifel being very conservative. Man, I had it up. I'm just scrolling through, trying to find the actual words. I'm not going to be able to find it here in the next few seconds there. So we'll just say, I remember seeing the word extreme. They said it's extremely unlikely that we're going to hit new all-time highs here by the end of the year. So they're being a little more cautious. So you have some analysts coming out a little more cautious, some analysts coming out aggressive. Everybody's got an opinion, like we started the show here with. I have an opinion as well, although my opinion is more chop. I think you're going to see some chop. I don't want to chase in this environment here. I don't think it's going to be as easy sledding as the first half. We've come back nicely from the lows. And it's been a nice bounce. And I think if you were sitting all in stocks and you were kind of for second week of August, kind of like, oh man, I'm losing a lot of money here, and you're bouncing back here, I don't think you should expect to make a lot. I think it's like you should be a little bit happy that you got some of this money back and maybe be lightening up into this rally here. So it's been a really good rally here, but we're going to bring Sean on. Sean Emory has obviously got a lot of stocks that he talks about. He's been all over and making some great calls over there. So let's grab Sean.
Sean Emory, founder and CIO of Avory Company. How we doing? It's good to have you on. How we doing, Sean?
Good to see you. How you guys doing? It's been a little bit.
We've been talking about, everybody seems to have an opinion today. A lot of analysts chiming in, some bullish, some bearish. It seems like we have like 100 ratings here today. Lots of opinions here. So we want to get Sean Emory's opinion on this market. I mean, the first half, let's do the macro first. First half of the year, really good for stocks, obviously. A lot of companies, a lot of technology companies really benefiting. Then we cooled off a little bit through the summer here, but we've come back in the last couple of weeks. What's Sean Emory's lookout for the second half or basically the last quarter of 2023?
Yeah, I mean, our view is somewhat more of the same, which is, we're pretty constructive on the economy. The big picture, though, is like you step back, you look at what the companies have tried to do over the last year, which is essentially prepare for this recession. We heard the narrative, for good reason. There was a lot of data points pointing to economic weakness. And, you've heard like the rolling recession. Really, it's just like, service doing well, goods doing bad. And it's really like this two-sided economy. But with that kind of in mind, these companies have been cutting costs operationally for a year. So, what you're seeing is pretty healthy margins across the board where macro stays static. And, what we're actually hearing is some reacceleration in growth. So you get back to an earnings story that becomes somewhat interesting. And that's why you're seeing earnings estimates come up essentially across the board. Obviously, there's pockets of strength, pockets of weakness that I think you want to look through, but more of the same. And companies have been preparing for a potential recession. Yeah, I mean, that's really kind of our view is companies are positioned well.
Sean, you were talking about removing the top 10 stocks in the S&P and then looking at valuation from there, and you were arguing that some of these stocks are cheap. I've argued kind of the same. I mean, we know the S&P, you look and you're like, oh, it's relatively expensive. But when you look at those top companies, like obviously Apple trading 30 times earnings, Microsoft trading was out 32. It's pulled off the highs. I don't think it's that high anymore, but 29 times earnings. All these companies, have premium multiples here. Amazon's always had a high multiple. But you were saying if you remove those stocks, the S&P doesn't look that expensive. Talk about that.
Yeah, I mean, look, there's so many ways to slice and dice, and hopefully there's no bias in what you're trying to achieve here. But it's you literally just you strip out the top 10 companies in the S&P, and what you have is an index that is trading at mid teens multiple, right around 14 to 15 times.
Wow.
If you just look at charts, right? If you just like started to look through and scan through like small caps or mid caps, you'd see a much different story than if you just started to scan through like some of the large caps that are out there. So I think that shows up in valuations as well. And you go back in history and you just take the median or the average of the equal weighted, or you take the median average of stripping out the top 10. We're trading below market multiples, average market multiples or median market multiples. And ultimately, I think that spells opportunity. That's where you probably want to start looking. It doesn't necessarily we were talking deep recessions a year ago. We were talking about a bear market that was going to last an eternity. It makes some sense that people the first thing they step into are the most comfortable assets that are out there. Add on the AI trend and who's going to benefit there. I think it's clear they'll benefit, but I think you take those two things. Fear. How do you step back into the markets? It makes a lot of sense to go into the big heavyweights, and then you sprinkle on a little AI, and I guess supercharges some of those. So interesting opportunities in everything else of the markets, I think.
Well, let's talk everything else and give us a couple of names that you're looking at. I know you gave us Fiverr there. I think it was last time we were on the show, and Fiverr had a really good couple of weeks there and went from 27 to about 34. So you've given us a good one in the past here. You've given us some good calls on Twitter as well. Give us a couple of names that you're eyeing, maybe in these that aren't too expensive here, but still have that opportunity to move.
Yeah. I do actually think, so I'll give you several, right? And
Okay,
full disclosure,
excellent.
we may own some of them, but Fiverr, we mentioned, we still think something like a company called Nutanix, NTNX, continues to perform fundamentally. They've been going through this transformation. They're a software company, software for infrastructure technology or hardware. The software sits on top of it. They're fully through their transition. So now you're seeing a story where revenue is accelerating, margins are expanding, and a low multiple. Probably one of the more interesting opportunities out there. Investor Day, we're going to attend in New York in a couple weeks. You take a you take a company, so that's done really well. And we expect more there. But you take like a Zoom of the world, which we think probably has a couple more quarters to flow through, and continue to have Zoom Phone and Contact Center perform well, and become less of a meeting story, a Zoom meeting story, and more of a full unified communications platform. And that's coming to fruition. It's just a matter of the market essentially believing that. A lot of that has to show up in the financials, everything that they disclose. So we think that's more to come, and it's a cheap asset. $6 billion of cash, no debt.
So you think Zoom is going to not be a one-trick pony in the near future? Because I've always argued Zoom is cheap, but I've argued on the other side it's been cheap because they need to prove that they're not GoPro, that they just have one product and that's it. And competition obviously has come for that product. We know we've had Cisco, WebEx. Obviously, we use Teams, on this. There's been so much competition, coming in. So yeah, when Microsoft's attacking you, so you think there's more stuff coming for Zoom?
Yeah, again, it's one of those things where when you go to 600 and you go to 200, 300, 100, 80, 60, the natural instincts is I'm not going to get burned twice, right? The average investor. So you step away, but last quarter they disclosed 10% of revenue is now Zoom Phone. So that alone just tells you they're diversifying some of their base. Not only that, they're attaching to their meetings, right? So that now that customer becomes much more sticky. Zoom Contact Center now has 500 customers, probably growing, triple digits. It's a year and a half old. So we suspect, in the next year and a half, 2 years, you'll see 25, maybe 30% of their business coming from non-meetings. And it's a big deal. I think the Microsoft stuff is a little bit, it's real, right? It's real, but it's a little overblown because the world's big. Not everyone uses, Microsoft sales teams loves Zoom. So, for us, we think we're comfortable in the valuation, comfortable in, Eric Yuan, the founder and CEO, and what they're doing there. And the proof is in the pudding in terms of, some of the disclosures around phone and contact center. So
let's keep talking about some of these consumer stocks, of course, both in the traditional or technology sector. It seems like you're seeing them as attractive investments. What are some other ones here that you can kind of point out for us, Sean?
And this is, consumer assets you're referring to?
Yeah.
Yeah. I think there's a lot of ways to slice and dice, what is the consumer, right? So one that we appreciate, we've always appreciated, we've bought it, we've sold it, we've bought again, is like a Square or a Block, right? They're highly tied to the consumer. Many like fintech or financial, a lot of people are fearful of student loan debt. A lot of people are fearful of, the economy at the end of the day, delinquencies, things like that. So some of the areas that target that have been hit pretty hard. So that's, one area that I think is interesting. Then you go to like the retail side, and retailers, if you take the index of, many of the specialty retailers, they're trading near, financial crisis, multiple lows.
Right.
We own Capri, and that just got taken, just got acquired, 2 weeks ago. It was a good win for us, and something we held. But the, Tapestry, acquired it. And that alone is that interesting, trading at a, sub 10, 9 multiple. Now it's going to have 6, brands. For us, we step back and we want the deal to close and then see how, things, happen thereafter before actually getting, hyper involved there. But, you look across the landscape of retail, good brands, just trading at multiples that are fairly attractive across the board. The question is, when do you enter that? Because there was a lot of consumption a year and a half ago, 2 years ago. So you're comping against some of that. The consumer is a little bit more discerning in between what they want to buy. But there's an opportunity there. It's just a matter of, I think, when you pull that trigger.
All right. Of course, we've been looking at the AI kind of space, and of course, we can take a look into this. And I wanted to hear your outlook on kind of generative AI areas and stocks that could be bringing it. Maybe some real AI, some fake AI, the way that I call it. But let's talk a little bit on this. One company that I saw in your notes that was interesting to me is what about like a Wix? Could Wix be an AI play?
Yeah, no, good pointed question there. Um we've look, we love Wix for many reasons, management to product. And it's all about data, it's all about platform characteristics. It's giving the user, like, if we're talking about AI and generative AI in terms of, what's the utility aspect of it, I think that's ultimately what matters. Like, what's the utility to the end user and customer? Wix is right there with the best of them. They started Wix ADI, artificial design intelligence, in 2016. I remember how like shocked I was. You basically like type in what your business is, and it gave you like a preset, highly unique, personalized website. Right? It was like probably 50% of the way of like what you actually thought this stuff should look like. You fast forward to today, and they just launched their own another version of like essentially Wix ADI, and it's really around generative AI is really around an AI, and how we're engaging with it today is engaging with it in your own verbiage language, right? So that the actual computer can do and achieve what your outcome is. So Wix has all the data, has users that are trying to build websites that aren't skilled in code. And so it sets up really, really well for them. And their product is, first to none or second to none in terms of quality. So I think, they're really well positioned for AI. They've been doing this for a long time. They've published plenty of research pieces around AI. So this is definitely an AI first company that hasn't necessarily talked about it enough over the last, 5-7 years. So that's kind of how we're thinking about it. And Wix is super well positioned with the user base and assets. So.
All right, let's wrap it up with some Fed talk. Of course, how do you see the Fed Reserve moving forward? Of course, they'll have a meeting this week, but a lot of us are looking towards the November meeting. What do you think happens here, Sean?
Yeah, I mean, what's going to happen is, you kind of just have to go off the probability that you see out there with what the market's, suggesting. So, the market's is essentially telling us, right, in terms of probabilities, saying that, September is, no go in terms of rate hikes. Same thing with November. So we're going to go with that for now. I do think, more deflationary type of data is still in the cards. And, ultimately, I think that's what's going to drive the boat. I think the Fed is clearly data dependent now. I think they've articulated that, seen that, even like, after last week's economic data that came out, you had some of the members come and speak, and we're at that moment. The question is, there's still this like little wiggle room that I think, people are still concerned about, where, do you get an actual acceleration, reacceleration in inflation? You just don't see it. I mean, it's hard to point to anything that's truly reaccelerating. And, the Feds has, they were late, clearly. I think they kind of got somewhat lucky because of all the deposits and cash that are out there. But, you could say, stepping back and say, they probably did a decent job here of an economy that is in decent enough shape, and companies doing decent, jobs doing decent. I mean, it's hard to say things are bad. It's just, are they perfect? No, but that's a hard job to do, specifically after, a once in a hopefully lifetime type of event that occurred. They put out one fire with Silicon Valley Bank, and, a couple others around there. So, I think for us, when we look at the Fed, we think, they're essentially out of the equation. More commentary that's going to happen, because again, you don't have, you have another couple weeks and then a whole month to skip. So they'll be as hawkish as they can, without trying to tighten markets too much, because I think they think they're restrictive, and we agree. So
Sean Emory, founder and CIO of Avory and Company. Definitely check him out. Always good to have you on, Sean, and we'll bring you back, my friend. Take care.
Awesome, guys. Appreciate it.
See you, Sean.
All right, let's get back to the markets. We still are climbing here in the pre-market, now back on the SPY to 450.83s. Of course, closing price I have here on Friday as 451.22s. We're almost back to that level. What do you think here, Dennis?
Chop. We're still just chopping around here, and we do run into serious resistance when we start getting up here. Just look at SPY up at 458 to 459. I always look at the SPY because I don't pay for the S&P quotes. Complained
Me
about
too.
that before. Yeah, as a professional, they went from $6 a month to $700 a month. That was about 7-8 years ago there, and I was
Yeah,
like,
that's
no,
like
I don't
Twitter
need it.
going with their brand issue. The Twitter of
Well,
the
and that's a whole
organizations.
nother issue. I don't understand the Twitter brand.
Pay
It drives
up,
me
Dennis.
nuts.
Pay up. $2,000 a month, baby.
Yeah, that drives me nuts. So no,
Dennis,
I don't know what's going on
I
with
think I'll
Twitter, and we're gonna
pass.
call it Twitter forever because X is just a horrible name. So, but that's a story for another day. I think we
What's
just come back.
dragging us?
We've come back a long ways from the lows that we were just at 2 weeks ago. We've bounced nicely. I think it's time to have some digestion. If we're going to go higher here, I don't think it's going straight up. I don't think we're just going to miss this rally. Maybe I'm wrong. Maybe we're just going to have a second half, just like the first half here. And I keep saying the half, but there's only 4 months left here. I just don't think this last third of the year is going to be as easy. And you know what? The summer wasn't as easy. We know the first half was really good. July was really good. They're like, oh, and then August was a sell-off. So, we bounce back end of August. Maybe we just continue the merry parade. Maybe people are too bearish. Maybe, to Sean's point that, stocks are fairly cheap when you get outside those top 10 in the S&P. So those are all good points. I just don't think with interest rates where they are that people are just going to be, spending and spending and spending forever. Eventually it does start to slow down a bit. So not saying I'm getting full bearish here. I just think you don't chase stocks. I think expect more chop in the last 4 months of the year than these smooth moves higher or smooth moves lower. Everybody wants to say, we'll be 20% higher, we'll be 10% lower, all these calls. Maybe we'll just be at the same spot. You're just going to be able to play that chop. Fade trade.
Yeah, that's what I'll be looking for. I'm expecting that. I did want to throw up a little ticker time here. So you guys in the chat can throw up some tickers. Go ahead. This is your chance, guys. One thing that I would say here is I am watching some oil stocks. I'll just kind of bring something for us to talk about. Of course, oil is at 85.55. I'm seeing WTI. It's a little bit higher now, but it's been in the range between 85 and 86 as of late. I know I went after Chevron last week. I already sold a little bit of a portion of this position, looking for this to continue climbing. I got this at 161, starting to see this make a move. I've seen XOM starting to make a move, and just look at the XLE, right? To just make it easy. Look at this. This is starting to look pretty strong to me. What do you guys see here? Last time we were up here, we fought in the 90s to get back up here. Now we're starting to hold the 90s. I think this is something definitely to look out for, especially if you're thinking about inflation coming back. Well, we know how oil can be sticky. And if oil comes back to, let's say, 90s or $100 a barrel, where we're going to be at?
Yeah, well, oil has been the buy. June, July, everybody was throwing it out. It was all going to be AI. We don't need oil anymore. We don't need value stocks. We're just buying AI. And then that came back to life. And we know some of these stocks that were beat up did come back. My PXD has been unbelievable. I'm still on Pioneer Natural Resources. I picked it up at 215, took some heat and went down to 200 after I'd bought it. Now it's up here at 241. It went ex-dividend here today for $1.84. So it does appear that it's down here today, but you got knocked at $1.84. So it's only actually down 82 cents. It's been a good one too. Oxy, I did ring the register in that one finally. Just kind of, got away from the Buffett zone to a certain extent. It always seems to come back into that Buffett zone. I like that from 58, 59. Chevron is a pure value stock. I mean, cheap. They're doing the buyback still. I mean, down in the 150s, it seems like a no-brainer. But you could argue too that it's been a pretty good run for oil here. So certain stocks maybe are chasing to a certain extent. The XLE is 90. It was 77. So I mean, maybe you need a pullback here now before just running in and chasing oil. But the momentum traders like this now, where I'm kind of more of a turn trader, where I try to identify turns, or when stocks are going down or sectors are going down, they start to hook. That's where I like them more. Oil's been really good for the last couple months, but maybe I just don't. Again, I'm going to throw the same thing. I don't think it's going to be as easy as it was the last couple of months for oil. I don't think we're just going to blast off. An XLE is going to be 110, 120. I don't see that happening.
I'll tell you a name that it seems like they don't want nothing to do with it is Coca-Cola. And I've been talking about that they don't want anything to do with it. I think Dennis has been pointing out to this, of course, with the Tina trade, with a no Tina trade anymore. What do you think about Coke here?
I have a day trading position in it, so I'll limit my comments.
I would pick the one.
Yeah, I don't have a lot of positions, but I do have a day trading position, meaning I'm getting out of it. I actually was just selling some of it right now, just before I even start talking about it. It's I just had it just it's hedged against other staples, but overall, I talk against because I am long a little bit in the day trading portfolio, but again, I just don't like these sectors as swing trade long-term investments because 3.1% dividend. Why am I in Coke when again for trades and pairs trades and stuff like that, it's different. But why am I investing in Coke at this point in time when I can go and get 6% in a GIC? I mean, the banker calling me 2 weeks ago, 6%, 3%. Is the Coke dividend. I mean, you say, oh, what a nice dividend, 3%. Coke is not a nice dividend anymore. Coke is not a good dividend at all. And there's no growth. Why am I in Coke? Why am I in these consumer staples? You've got to ask yourself those questions from a long-term perspective with the long-term hat on. And I think they continue to underperform. Utilities, I think they all continue to underperform until interest rates actually start going down.
All right, let's keep going. You guys wanted to take a look at AI. I seen AI mentioned twice. C3 AI coming back a little bit towards the 30s. This is one that I don't think gets back there to 45, but that's just my outlook.
It's hung on, but this is one of those that was hype. Again, the technicals are somewhat productive. You got a little cup and handle here. You can see if you really scroll in just recently here, Mitch, you can see there's good support down here at 28. It's consolidating here. If we get an NVIDIA pop, this will pop with it. But I think from a long-term perspective, this isn't like just because they got the cool ticker symbol. I don't know if this is where I'm putting my AI investing dollars.
Yeah, I just see this as a rejection of the move. I see this as an ABC move, and it'll just go down from there. But that's just using fibs and Dow theory. Moving forward, Array. That's an interesting one mentioned in the chat here. I can tell you right now, I've never traded Array well. Been stopped out, I think, twice that I've played it. It just loves to go sideways for me, and that's the problem. Sideways stocks are not your friend when you're trying to swing trade. I'm trying to get this stock above highs. Look at the weekly highs. They're all in a similar area now. I think that's one thing to
break
point out.
Though.
It's trying, but it just never can get the move. That's where for me, it's a wait and see type of move. I want to see it continue to move towards like 30. Then I can start maybe looking for pullbacks.
I have no comment on that one. I don't follow it closely enough.
Okay. It's just solar stock at the end of the day. Solar, of course, why not just stick to First Solar? I like to just do that, right? Stick with the leader. We'll see what happens with that.
It's been the best of breed, but solar has just been an epic disaster everywhere.
Exactly.
So,
that's why I can't go
financing.
Jumping into it.
Interest rates have hammered the solar sector. Bottom line, certain sectors have been hit. Interest rates have hit solar. Interest rates have killed ENPH.
Here's an interesting one, of course, and I'll bring these two together because I see them mentioned in the chat. Amazon and Shop. What do you think about these? Shop already just taking off. Big, like they say there's no such thing as V bottoms. That's a V bottom if I see it.
There you go.
At least right now in the recent action. And look at that. You see, they say there's no such thing, but that's it.
I wanted it. I wanted it lower. I wanted it in the 40s. I'm mad I didn't get it. You wanted it too. We both wanted this in the 40s. Yeah. It didn't get there, and now it blasts off without us again. It's like I make good calls on this stock. I just don't execute on this stock. I don't get in there. Amazon, I've had in my wife's RSP here since 108. Continue to hold it there. It's a fairly large position, actually. It's grown even larger. I haven't sold any Amazon here yet. It's been holding up well. Does have resistance up here at 140. Does have a nosebleed multiple, but got to be invested in something.
Yeah, I think Amazon, to me, it wants 140, 150. So I'm going to be looking for it to kind of get the lift. That's just a stock that I'm keeping to watch.
It's held up well.
Yeah, and then with Shop, I'll keep an eye on both of those. We'll see if some of the growth names can get moving. Of course, we'll be keeping an eye on this one. Here's an interesting one, a lithium name, just to kind of wrap it up. It's 901, but LTHM has not gone anywhere in the last couple of, let's say, days or even weeks. You guys can see it, a little bit of a bunch up here on the weeklies in the last 3 weeks. At least I could see those lows kind of hanging in there, the 21. I'd see that as support right now. I wouldn't want to see it go back through 21, start making its move to 22 and 23. Yeah. But my biggest thing with lithium is always keeping an eye on the auto manufacturers. When I've seen Tesla rip, a lot of times these lithium names come back like in a lagging motion. But if I see Tesla or some of the autos struggling, a lot of the times I've seen the lithium names struggle.
Oh, for sure. For sure.
And so this is just one thing that I keep. Yeah, I just keep watch on that relationship.
Direct relationship. Valuations are all dirt cheap on these things. I think you got to have a long time horizon. I've got lithium in the long-term portfolio. I also have ALB in the long-term portfolio. I think 10 years from now, I'm going to be happy. They've been out of favor here. Short-term, from a trading perspective, hard to be long these things as a trade because they've been underperforming and they're heavy. And like you said, we've got issues with the autos right now. I do like lithium long-term though.
Yeah, that's something that I think of too. I want positions in here, but thinking like 5 years out. You know what I mean? And that's the one thing you got to think about too, right? It's not maybe putting all your eggs in at one time, especially when we're thinking investments. I don't like to put in my orders all at once, but to each his own, right? If you guys like to more average down approach an investing style on this, I would definitely be kind of looking at monthly charts to try to get me monthly supports. So on LTHM, that's 20, right? And then the next layer down, 15, things like that is what I'd be looking at to try to get in and time this stock, right? When you're in a long-term investment, you don't have to all that money in at once, right? That's one thing I would just say. Be careful with that in the lithium names. All right, that's going to do it for us. Let's wrap it up here. Any last comments on the market, Dennis, as we get into the open?
We're seeing a lot of chop in the pre-market. We were down, then we were flat, then we're down, and we're flat. I think it's a preview of what's going to be happening here. Analyst commentary will move the markets. Fed speak will still move the markets here. I just think everybody has an opinion here, and a lot of them are conflicting, and that's why I get this feeling that we're in for a choppy period. How do you trade choppy markets? You do not chase. That's the main point I'm trying to make here. There's certain markets when you're full-blown momentum, maybe you can chase in certain markets. In this type of market, I think you don't get paid to chase.
Definitely hit the like button, and I agree with that outlook, Dennis, especially in the chop.
I just hit the like button.
One of my biggest things in the chop is that it usually does what? It usually chops up not institutional action, but more retail action. So that's one thing that I would put out there is just be careful trading within those ranges. And we're not seeing the continuation moves like we were when we were seeing all these tech names continuing to lift and lift. I'll be watching to see the tech names kind of take lead, of course, and keeping an eye on the financials. I still see them struggling a little bit, but nobody seems to be talking about those names. Of course, I'm talking about regional bank outlook. What will happen with the KRE? Will we move down to 43 or back to 49? If we're back to 49 and 50, yeah, I can see the market continuing to lift. I've also been pointing this out in the XL left, how this has been coming back. Had a recent kind of little push last week. Let's see what happens now. I'll be watching the banks. And of course, we'll keep an eye out open for all the different sectors and industries. If you guys catch anything, let us know, of course. You guys can always hit up Dennis Dick, Triple D Trader, Money Mitch BZ. We'll be back with you guys tomorrow. Any last comments, Dennis?
One more thing before you go. Yeah, one last comment is just keep an eye on the TLT. This market is not going to rip, roaring, and rallying until this TLT turns. Yeah, TLT is still down here again today. Still trying to look like it wants to break down to new lows here. You need to get this thing back above $100. This is an issue for the overall market. What's bonds have to do? Well, it's rates. It's rate outlooks. It's a good tell on all of that. And I think if the TLT continues to show weakness, I think it's going to be hard for the stock market to have a sustained rally.
All right, that's going to do it for us. Like always, you guys can catch us tomorrow right here on Pre-Market Prep. Up next, you guys got live trading. Don't go anywhere, team. We got a lot more for you guys right here, of course, on Benzinga. Don't go anywhere, team. If you didn't catch last week's Kathy Wood interview, let me know what you guys thought about that for those people that did catch it. And, of course, you guys can check that out. That's right there in our channel. We'll see you guys over on live trading. That's starting up next. Don't go anywhere, team. We got a lot more for you guys right here on Benzinga.